Then Rose, you can take over.
Thank you, Regina, for praying for us and introducing us. Good evening, everyone. Thank you very much for joining us. It's just barely 3 weeks since we met, or since we had another meeting, but it actually feels like a lot of time. I think so much has happened in the last 3 weeks. We've had a president-elect, we've had a legal process, and now we have a confirmation of the president-elect, and we thank God that it's been a peaceful process. I think if there's anything we did is to pray for that. And I think it's time to go back and give thanks for a peaceful process and even for what is remaining. We pray that it'll also be peaceful. The transition will be smooth and will be in a new dispensation. And this just reminds me of the transitions that life always presents. And of course, the one major transition is the retirement, where things significantly change. Maybe if I could use the political language, policies change. The way you are doing things before retirement normally will change. You'll have more time, you'll have to take care of most of your decisions. So for majority of us, especially when it comes to medical issues, we're in employment, we have our employers who are always taking care of our medical cover. Sometimes we don't even know the full details or even the full cost of medical cover. But when you leave employment, now unfortunately you have to deal with those decisions. And that's why today we have one of the experts in this field, Mercy Andaro. Mercy is a friend. It's somebody I've known for quite a long time. I think I got to engage her at first in 2007 when she joined the organization I was working with, and she joined in the medical department, but she came from a background of actually intermediary, that is broking. So she's had wide experience and knowledge in dealing with various providers. Then she joined the insurance industry, where she grew to actually be in charge of Britain Medical's operations at one point. And then she proceeded to another organization. And now she's back on her own, still doing the same thing, interacting with various providers and providing various solutions. So she's an expert in medical insurance and general insurance, but being a broker, basically she handles all forms of insurance. So Mercy, I want to thank you for agreeing to speak to us and to share the knowledge that you have, especially in this space. And probably what I would want to maybe add on to is that Mercy, we've been discussing a little bit about how we are doing now post-employment. And one of the things she told me and was of interest to me is that she has taken a keen interest on medicals for seniors. And I don't know, maybe Mercy will tell us why seniors, why do you have that particular interest? And you can also share probably a little bit more about who you are. I've only talked about your professional life. There is a lot more to you. So over to you.
All right. Asante sana, Rose, and thank you for the privilege of hosting me on your forum. I think I've had the privilege of sitting on the other side as a participant and really following on what you've been doing. You know, a very important thing, and I think one of the things that has really now come to me strongly now, being out of employment and now in self-employment, is, I'd call this for me an early retirement. So everything that, you know, Rose has been sharing, webinar after webinar, and even I also bought her book and I've been reading it. I mean, it's really useful. If I can quote the good book that says that our latter days are supposed to be better than our former days. But I'm realizing now being out, you know, in the entrepreneurship world, that if you don't plan for those latter days, then they may not be as glorious as you expect them to be. So, Rose, I really want to appreciate, I mean, the work that you're doing, and even the privilege of being, you know, being a speaker on this. I think you've said a bit about me. Yes, actually, we met before 2007 when I was working as a broker, actually then, and you were then in Britain, and then I later joined Britain. So I've actually known you a bit over 15 years, and friends, colleagues, and now happy to be partnering on this. Like Rose said, I've been in the insurance industry for, this should be my 25th year. And I've done quite a number of things. In fact, I was just recounting to Rose, I think I've been, at least had some experience in each and every area. But I think for me, something that has lingered for me is medical. And why medical insurance is, sometimes it is the difference. It is the difference between life and death. It is the difference between, bankruptcy, sometimes for some family. It can make the difference between you losing a loved one or you having now to, to liquidate all your investments and savings to be able to take care of a medical bill. And I think this came to me really strongly. Last year, I don't know what was happening, collapse in the house, and, was found by my husband and rushed to hospital. And initially they couldn't discover what it is, but by the time they were done with the various medical tests and for them to discover that it was malaria that had really extended, I mean, by then the bill was already at 500,000. So now looking back at that, if I did not have medical insurance, then really that is something that would have set us back as a family. We'd either have had to, liquidate some, some savings or some investments, or maybe even take an emergency loan. So for me, medical really, I'm really passionate about it. And especially now, I've been on this side, I guess as you grow older, you get to really learn more. I think in the age we're at, we're that place where we're taking care of our children, but we're also taking care of our parents. And it's really made me more and more aware about the vulnerabilities. And just looking at my parents, I can also see in a few years down the line, I'll also be in their situation. And I guess that's why I'm really passionate around medical insurance for senior citizens, because I consider them to be a vulnerable group. So Rose, I think that's why I'm really passionate about that. And with your permission, we can delve into the subject of the day.
Okay, thank you. Please proceed.
All right, allow me to share my screen. I trust you can all see my screen.
Yes, you can put it on presentation mode.
Yes, yeah. All right, so our topic today is post-retirement medical cover, and we'll skip that. I think I've already told you a bit about myself. And since we have quite a bit to cover, I think we'll just go right into our training outline. And in terms of what we'll be handling today, first we'll start with looking at the key definitions in medical insurance. And I'll shortly be telling you why we need to be familiar with these definitions. Then we'll be looking at who are the players in terms of offering post-medical insurance covers in the market in Kenya today. And then when it comes to purchasing a medical insurance cover, what are the key considerations? What are the key things that you need to take into consideration when you're purchasing a cover? There are many covers, but you come to learn not all covers are equal. Now we'll also look at a case study and an example, just taking you through a practical example of what is on offer, some of the nitty-gritties around the medical cover. And I hope if we have time, we'll also be looking at the National Hospital Insurance Fund, just a few highlights on that, because it's very much tied to the medical covers that are there in the market, but we'll really not be going into the details of that. So starting with the key definitions, and we'll start with pre-existing condition. And now coming into a cover, you could be having condition for which you've been receiving treatment or that has been diagnosed by a doctor that you have. Now, when it comes to pre-existing conditions, I want us to also exclude what we call acute conditions. Acute conditions are those that occur suddenly. They last for a short time, like malaria, for example, a common cold, and they are treated and resolved without any permanent effect. So when it comes to now describing pre-existing condition, we will exclude those. Now, for someone who comes into the cover when they're already expectant, or maybe you were involved in an accident and had a previous injury, then that will also be considered pre-existing. Why is this important? Now, when it comes to insurance, one of the key things that we need to know is what is called the principle of utmost good faith, that it is required of all the parties in insurance, that is you, the person purchasing the insurance cover, and also the insurance company on the other hand, it is required that you deal with each other, in honesty. And so as you come to the cover, the insurance company does not know you. They don't know where you've been. They don't know what you're suffering from. So they can only rely on what you tell them. So for anyone as you fill in the application form for your medical cover, it is important that you disclose your pre-existing conditions. Again, why this is important is I've seen sometimes, clients will skip this. Maybe they are trying to be, clever of something. Then later down the line, you need hospitalization. And at that time when you're talking with your doctor, you may not have been honest on your application form, but people tend to be very honest with their doctors. And maybe you will tell your doctor, now, this condition, I've had it since 1985. And the doctor may unknowingly, just put it down. And as soon as the insurance company sees that, then they may, they'll say this person was not honest with us, and so will not cover this. So it's really important, apart from what we are calling acute, conditions, that the common cold, maybe malaria, something that comes in and goes, please do disclose. If you have something on which you have been receiving treatment or has been diagnosed by your doctor, please disclose it. Now, the other thing that we need to learn to know about today are chronic conditions. And these are conditions that are not acute. They are more long-term, they last for more than 1 year. And you normally require ongoing medical attention. And there are also conditions that limit the kind of activities you carry on. And they typically have no cure. So it's something that you'll have for a very long time or even for the rest of your life. And the other thing is, so it requires ongoing treatment and is mainly not curable. Examples of these are heart conditions, diabetes, cancer is also considered as chronic. Hypertension, these are like high blood or low blood pressure issues, arthritis, and even kidney diseases. Again, if prior to taking on a medical cover, you are being treated for one of these conditions, it's important you say so. The insurance company, I think most people don't disclose because they think you're going to be discriminated against, or you may not get cover. But the law and the guidelines from the insurance regulatory authority is that now you cannot be discriminated based on having a pre-existing and chronic condition. So what will happen is that maybe if it's very bad, if it's something that's not being managed, maybe your premiums could be higher, or you could be put on a longer waiting period, for example, but you definitely will not be excluded from cover. Now, what some insurance companies also do, they will enroll you on a wellness program. And this is a program in which you have access to doctors, say like nutritionists, fitness experts, who then will help you manage whatever chronic condition that you're currently suffering from. So please, as I have said, because really, when people at loggerheads with the insurers, it's normally around this, that you did not disclose that you had a pre-existing condition, and you also did not disclose that you had a chronic condition. Now, the other thing I want us to look at are what we call the critical illnesses. And these are mainly life-threatening conditions. Normally, you need to be on medication for a long time, or sometimes, like you, need mechanical support of your vital organs, failure to which death would be imminent. And now, for example, if say you're on dialysis because of some kidney malfunction, then this would fall under a critical illness. Typical critical illnesses include cancer, a stroke, heart attack, kidney failure, like I'd said, and paralysis. Now, something to note when it comes to critical illnesses, every company defines what critical illnesses they cover. So, for example, your doctor could diagnose you with as per definition, this is a critical illness that is life-threatening. But as long as it is not in the definition specified by the insurance company in the policy document, then sadly that will not be covered. So it's very important, even as you're buying a cover, please take note of what they're normally, okay, some people have about 4 or 5. There are some who have extended their critical illnesses to go all the way up to maybe around 8 critical illnesses. Excuse me. So these are the main key definitions that we need to understand as we buy medical insurance, because your problems with the insurance company or with the cover you have will mainly rest around these areas: your failure to understand or your failure to comply with this. So next, I want us to look at who's providing covers in the market in Kenya today. And in looking at this, I'm excluded, of course, international covers. I'm looking at Kenyan-based companies and also a Kenyan-based insurance who are offering covers in the market. And right now we have 6 companies who are offering what we call the seniors covers in the market. And seniors mainly refers to people who are 65 years and over in age. So we have Britam, and what I've done here is put who the company is, something very critical. What is the maximum entry age for joining the cover? And then how long can you stay on cover for? Because this is very important when it comes to you choosing a cover. So we have Britam being one of them, and the maximum entry age is 74 years. So from the time from your 75th birthday, then you cannot join this cover. But if you join by age 74, then you can continue to renew cover for life. The second company offering it is UAP. For them, the maximum entry age is 79 years. And once you join by 79, then you can continue to renew cover for life. APA, likewise, like UAP, entry maximum age is 79 and cover is renewable for life. Now, CIC is a bit different. They allow you to join by age 18, but then by age 86, after you complete your 85th year, from your 86th year, you can no longer be on cover. So that's important to note, even when choosing a cover. How long? You see, like now, people are living longer. The life expectancy of Kenyans has actually improved, not just in Kenya, but worldwide. So if you have a cover that restricts you only to 85 years, so you say you live to be 90, 95, what happens to you then? And maybe that is when you really need the covers. So these are critical, factors when it comes to looking at a medical insurance cover. And now Jubilee have the one that they are selling to the open market, where maximum joining age is 70 years. And then you can only be on cover until you're 80. So from your 81st year, then cover ceases. A general accident cover are offering one where you can join at 75 years, and then again, exit age is 80. So from age 81, you're no longer eligible. So I hope you've understood that these are the ones offering senior covers. These are covers that extend from 65 years and beyond. Now, the other insurance companies who are offering, the normal medical, the medical insurance, and normally they will cover you for a maximum of 65 years. So maybe you've been on a cover, you can continue to renew that cover until you're 65, but once you're 65, then you'll need to join one of these service providers, the ones who are offering seniors covers, for you to continue being covered. So I hope you're tracking. If you have any questions, please feel free to put them in the chat, and we'll be able to look at them even as towards the end of the session. So we are now looking at other factors that we must consider when it comes to when you're buying a cover. And the first one are your personal reasons. And I think Rose really touched on this, the first one, your budget. How much can you afford to pay for your medical cover? And where is that money coming from? Is it coming from income, your savings, investments? I think Rose really took us last time in understanding how it is we can save towards purchasing a medical cover. And that's where then that really the financial planning comes in, because if you don't have a plan and maybe you don't have enough income, then in retirement, or maybe your savings and investments are not enough, then you really find yourself in a compromised position when it comes to being able to afford to pay for your medical expenses. The second one is your health status. And I think we've touched a bit on this. Are you predisposed to pre-existing and chronic conditions? Do you need any specialized care? Are you on any treatment regime? Because then this will determine the kind of cover and the specificity of the cover that you'll be looking for. The next one, of course, is your age, and we've talked about that. Are you within the stipulated entry age? I think sometimes people wait until it's too late to join cover. And then by the time maybe say you wanted to be, for example, with Britam, but now you're 75 or 76 years, then they tell you now you cannot join. So it's important to join as early and taking in mind, eligibility. Then as concerns your age, please, it's also important to know that premiums are also pegged to your age. So the older you are, it is considered your health deteriorates. And I think, Rose, if you have occasion, maybe you will bring in, a real medical expert, then you can really take us through, the conditions, the really specific medical conditions that people tend to be predisposed to as they age, and what it is that we can do, to improve our health, before we get to that stage. Now, the last one is really personal preference. And here, this is another issue. Now, if you're my brother or my sister from the lake, and it is important to you that when people call you, that you want to be had to be at Nairobi Hospital, at the Aga Khan, then that is your personal preference. Again, the bedside. If for you, you don't want to be in a ward bed where it's just a curtain around you and you're in a room with 10 or 20 other people, then based on your preference, this will also affect the kind of cover that you choose. So those are the main personal considerations. You're looking at your budget, your health status, your age, and even your personal preferences when it comes to cover. Now we'll delve now into considerations that really are based on the cover itself, specifics that relate to the cover. I hope I'm not going too fast.
You're doing very well.
All right. If I'm going too fast, then ask me to slow down. But it's that we have quite a bit to cover and want to leave enough time for questions. So type of cover, there are two main types of cover, and the primary cover is the inpatient cover. And the inpatient cover really covers hospitalization, everything that will happen to you when you're confined in a hospital. So that is mandatory. If you're buying insurance, that is the basic cover. Then you have options of taking outpatient, and this is the one, you go see a doctor and you come back home. Then alongside that, then we have what we call the riders, and these are optional covers that you can. Outpatient is optional. Things like dental and optical that fall now under outpatient are also optional. There's also maternity, but I'm guessing by the time you're retiring, umemalizana with that kind of thing. But yeah, so I didn't put it here for that purposes, but it's also a rider. Then we have what we call the add-ons, and these could either come at a cost or free of charge within the cover. And we're talking about the last expense or the funeral expenses cover that's normally accorded especially to the principal spouse. Most insurance are giving this for free from limits of about 50,000 all the way to 100,000. Then for some insurers, they also offer personal accident cover. And this would be either, it can be a cash payout. In addition to the cover taking care of your medical bills, it will also maybe give you, if you are permanently disabled, then there'll also be a cash payout to cater for that. Then we talked about critical illness. And when we talk about critical illness here, these are not your medical bills. Here I'm referring to a cash payout. Like say in the event that the first diagnosis, say you're diagnosed, unfortunately say with cancer, and it is the first time ever diagnosis, then normally the companies will give, apart from taking care of the bills, then they'll also be giving you a cash payout of a certain amount of money. Because as you realize, and as we go into the cover more and more, you realize even as you buy a cover, even as they're saying they're covering pre-existing and chronic, it may not be to the full limit. So it helps to also have a critical illness cover, either within the cover or even as a standalone to help you cater for any expenses that may be over and above what is covered within the insurance, within your insurance policy. So that's the type of cover. So here we're looking at the bed type, and this is where I'm saying preference, choice, my choice, my bed, my choice. So we have the ward bed, and this is the basic. It is the cheapest, and here you're sharing a room with many other people. I think privacy is by way of a curtain around you. Then we have the standard private room, and it's important to differentiate because sometimes you find your cover is saying what they call the SPR with hand basin. So this one does not come with a bathroom and doesn't come with a toilet, but it's a private room. And as I think the place we have seen mainly these ones is in Nairobi Hospital. So it's a room, all it has is a sink. It doesn't have its own private, but you're not sharing. Doesn't have its private bathroom and toilet, but you're not sharing a room with anyone else. Then the other kind of room is the private room with the bath and the toilet. So that's a private room. And then now we have the luxury rooms. Like I was saying, if you're that person who wants, when people are calling you, you know, my brother want to come see you, where are you? Want to be saying, yeah, I'm not feeling very well, but come see me at the North Wing. And you see, like it's really interesting. Like the place like the North Wing at Nairobi Hospital, it comes with its own, you know, by being there, you get your own personal, dedicated chef. You get a choice of menu that is really extensive. You have a luxury marble bath. You know, really, this is more of hotel standards, really trying to make your, you know, your stay comfortable. And I think some of these, our politicians, now I'm digressing, I think sometimes when stress is too much and they are being looked for, maybe you've been accused of something and you're supposed to be in for a while, you find people quickly go to hospital. They're suddenly sick and distressed. And most of them tend to find themselves in Nairobi Hospital. And I believe it's maybe in the North Wing or the South Wing where things are a bit cozy. Or maybe when it comes to the Aga Khan, you're at the Princess Zara, the pavilion. So those are the kind of bed types. And when it comes now to bed types, again, one could be your choice, but again, it is normally also pegged to the cover limit that you have chosen. So you find, for example, if you have purchased a cover limit of 500,000, Uwesingia Pavilion, Uwesingia North Wing, that will take you straight to a ward bed. But then as you increase your cover limit now to 1 million, 1 million is still a ward bed. 2 million is maybe what will get you a standard private room. 3 million, maybe you'll be at a private room. Then beyond 3 million, when you're talking about beyond 3 million, the 5 million, the 10 million, then you'll find it's an en-suite room. But it's important to note also here that with these en-suites, the insurance companies normally cap. So you'd see the cover, it says an en-suite, but maximum of 24,000, maximum of 26,000. So it also tells you if the hospital is charging more than that limit, then if you insist on being there, then it means then you have to cough up the extra from your pocket. Maybe around here, the other point of, maybe the other thing I want to bring to light, and I know it's our preference, and sometimes we want to, you know, to be in a place where people will come and see us and we are comfortable and all that. But especially when you have a lower, maybe from your health status, maybe really you're predisposed to chronic conditions. So maybe, you know, you'll be in and out of hospitals quite often, or if your cover limit is not much, and you have chosen, maybe your cover entitles you to a standard private room, or even, you know, of a higher limit, sometimes it helps to downgrade, you know, the kind of bed you stay in, because that you can opt to try and conserve your cover. Because then you don't want to spend all your money, you know, in the luxury of the accommodation, then you have less money to actually deal, you know, with your medical condition. So I'd put that in as a, you know, just as a point of guidance, that even though it is nice, maybe you're entitled to a very high standard room, but if your cover limit is not that much, or you really know that then you're predisposed to certain conditions, then it doesn't hurt. It doesn't hurt to scale down a bit if you're able to. And if your clan will allow you to, sometimes it's not even your choice. It could be your clan. And also maybe the cover you've taken, the other point is the other way around, the converse. Maybe you've taken a cover that gives you a ward bed, but you don't really feel a partner. You'd want to, you know, be in a standard private or a private room. Then you can always top up the difference out of pocket. The insurance company will not pay for you, but you can then top it up out of your pocket. So that is it on bed types. I think I've already alluded to this when it comes to cover limits. So what are the typical ones? So you have everything from some lower than 500,000, but I really normally don't discuss those. because especially as you get older and looking at what, looking at the average cost of hospitalization, especially in the high cost hospitals, you'd find, like, say you have a chronic ailment and you've gone in for 3 days or 4 days, then really the average cost of treatment is around 300,000. That's if you're in Nairobi, Aga Khan and the like. So normally if you have a cover of 300,000, it may not really take you very far. So you have a choice of 500, 1 million, 2 million, 3 million, 5 million, and 10 million. Now, different insurance companies have different, different limits. So you find some have, at least everyone has 500, 1 million. But then everything else after that, I think different companies have different limits. So it's important to see what kind of limit will fit you and what kind of limit is adequate for you. And like I'm saying, I think especially as you get older, please at least take a cover of 1 million plus. And that's especially if you're going to go to what is called the high cost or tier 1 hospitals. We'll be looking at that later. Then outpatient limits, you typically have from 50,000 to 100,000. This can either be, it can either be a standalone benefit for you as a person, or you can share it with your spouse. Some companies do not allow cover sharing. So if it's 1 million, each of you will have to get your own 1 million. 500, each of you will have to have your own 500. Then the other thing I find is insurance companies also now mix and match. For example, they say if you're buying a cover of 500,000, then you cannot buy an outpatient of 100,000 and above. So they restrict you to taking covers that are below. So sometimes you could be choosing a certain outpatient limit to go with a lower inpatient limit, but the company does not allow that. So like I said, the amount of cover now is one, your preference, what you can afford, your health status, and if you know you're really disposed to health-wise, then please go for a higher cover limit. It will serve you better. Then again, the category of hospitals that you want to access. And we'll be looking, I believe we'll be looking at that next. Now, the other thing that comes in here is you may want a certain cover limit. And I'll give you an example of a client of mine. So it was a couple, they wanted a joint cover limit, and they had chosen 5 million, a shared inpatient limit of 5 million. But then when they went for medicals, it was found the wife, her health was not so good. She was predisposed now to some chronic conditions. I think she was also overweight, and high cholesterol levels. And based on that, actually, for her, one, they were told they cannot share cover together. So first they were separated. And then two, she was told for her, until her health improves, then she can only take a maximum cover of 500,000. So she was willing, she was able, her budget was okay, her preference was 5 million, but then because of her health risk factors, she was not able to get the kind of cover she wanted. It's also important, sometimes insurance companies, based on your health status, they will, now they limit, they'll say for you, you can only have this kind of cover either on inpatient or outpatient. So there's also that. So it's not always it's not always up to you. There's also the input now of the insurance company in that. The other thing now that I've alluded to are the category of hospitals, and there are 3. And so we have the tier 1, and these are the high cost hospitals. We have tier 2 that are the medium cost hospitals, and then we have tier 3 that are the low cost and mission and government hospitals. So tier 1 is Nairobi, Aga Khan, Karen, Mata, Mpisha, AAR, Gertrude, and Avenue. Now, Avenue is a bit dicey because some insurance companies will put it in tier 2, while others will put it in tier 1. So depending on your cover, it's important to check what your cover will cover you for. Then tier 2 is Nairobi West examples. These are just examples. This is not conclusive. Nairobi West, Coptic, Melchizedek, Metropolitan, and Eldoret Hospital. Then tier 3, like I said, these are mission hospitals, like the St. Mary's. For some companies, St. Francis will also be here. For some, it's in tier 2. Low cost private hospitals and also now government hospitals are categorized as tier 3. Now, when you're purchasing a cover, it's important to see what tier your cover gives you access to. For example, there are what we call the budget plans that will give you access maybe to tier 2 and 3 hospitals only. There are some companies who have actually, like Britam, they have the tier 1 as a category of its own. Then they have a second category that is tier 2 and 3 hospitals. And then they have the complete budget product that is only tier 3, tier 3 hospitals. So again, depending on your budget, depending on your preference, and then choose a cover that will give you access to that kind of facility that one can afford and where you want to be treated. Now, a disclaimer, let me disclaim again. If you have low cover limits like 500,000, for example, or $1 million even, you're better off in a tier 2 hospital. And why I say this is sometimes you'll find the same doctor who's treating you in Nairobi is the same one who'll be treating you in Coptic, for example, and sometimes even in Kenyatta. So sometimes it's not even it's not about the medical, and it's not about the technical medical bit, but rather it's about, like I was saying, the accommodation. Are you in a private room? Do you have nurses that are smiling at you? Are you comfortable? That kind of thing. But when it comes to the real medical treatment, it may really not differ. The other thing, okay, tier 1 hospitals, sometimes in terms of facilities, they may be a bit better off maybe on some specialized equipment. So that is something to also consider. But if your health is okay and you're not too very fussy, and maybe for that season in your life, you cannot afford the very expensive covers, then for that, I'd really recommend that you consider the tier, especially tier 2. Tier 2 hospitals, you get an adequate level of cover, and you find your cover then would be able to go even further. Because the 500,000, like I'm telling you, I was how many days? Like four nights. Was I 4 nights or 5 nights in Nairobi hospital, and 500 worth of cover was gone just like that, and it was malaria. So it's important to have that in mind, because you want then you want your cover then to serve you as, as much as to get as much value out of your cover as possible. So that is category of hospitals. I hope we are clear on that. Now, the next thing is eligibility, and I think this we've already covered, and the main things are entry age and exit age. So typical entry age is 70, 74, and 79. Those are the most common. Exit age, then you have people who the maximum age is 80 or 85, or you have now at least 3 providers in the market who allow you cover for life. Again, eligibility for cover, apart from age, is again based on your ability to continue paying premiums. Because as you age, and maybe let me say here, premium is pegged, like I said, premium is, it's pegged to your age. So you find people are banded in age sets. So you have 60 to 64 years, then 65 to 69 years, then 70 to 74 years, 75 to 79 years, and then 80 years and above. So as you age, you'll be moving from 60 to 64, you've just retired. 5 years later, you find yourself in the 65 to 69. As you age, your premium increases. So again, maybe depending on how well, whether you went to see Rose for financial planning or not, and depending on how you have really planned yourself, you could find as cover becomes more expensive. If you've not really planned yourself well, then you may not be able to, to be able to afford it. And that's why financial planning, and that's why I really, kudos to what Rose is doing, because then it helps you take care of that for as long as possible without being a burden to people and without being inconveniencing to others or also to yourself. Then the other thing that may disqualify you for being eligible to cover is your claims history. Like I said earlier, if your health status is not very good and you're in and out of hospital, then the insurance company will also consider you a high-risk person, and they will then rate you up. And they could rate you up to such an extent that you feel it also does not make sense. Or maybe at some point they say, Roho Safi, look for another insurer, or we are not able to cover you, or they double your premium, for example, in a way to tell you really that, you're, for the money you have given us and how much you have costed us, there's no comparison. So that things to note when it comes to your age and also eligibility for cover. Now we have what we call sublimits. And like I said, we've looked at the main cover limit. Say, for example, you have a cover limit of 1 million. It does not mean everything that you have access to the entire 1 million in entirety. So we have what are called sublimits, and these are the main categories of sublimits. So you find pre-existing and chronic conditions. So you find maybe for that 1 million, for the category pre-existing and chronic, you can only access between 350 and 500, depending on the cover you purchased and from whom. So you find maybe one cover with this insurer, then for 1 million, they're allowing you 350. Another person is allowing 500. Then maybe you've upgraded to a really, high cost cover that allows you access to the entire 1 million. And around here now is where I see very many problems between insurance companies and people who buy insurance, because you bought 1 million, according to you, then, if you have a diabetes related condition, you expect them to access the whole 1 million, but that is not the case. So these are the main categories: pre-existing HIV and AIDS, cancer, organ transplants, psychiatric and psychotherapy treatment, what we call the inpatient and accidental dental and optical limits, any gynecological surgery, and all those others. So those, depending on each insurance company, then gives its particular sublimits. So when it comes to now comparing covers, don't just look at the premium. Also look at, and especially based on your health status, and especially if you have a chronic condition, try and see which cover will give you the highest, the highest coverage for what you really, for what you really need. So those are sublimits. Then we have what we call the waiting periods. Just because you bought a cover today does not mean you can start claiming immediately. This is a way of insurers to, sort of protect themselves. Because you find then someone, stays without cover, they know their health is bad, then, at the very last minute, then they come in and buy cover and they want to claim immediately. So insurance companies that then impose waiting periods. So once you buy a cover, irrespective, the first 28 to 30 days, you cannot make a claim unless you're involved in an accident. Any accidental related treatment, that one, there's no waiting period. But any other thing, even the acute ailments, then those ones, you must wait at least 28 days. And this is both for inpatient and outpatient. So consider the first 1 month of cover a waiting period. Then when it comes to now pre-existing and chronic conditions, you find those ones have even longer waiting periods. So you have some companies imposing 6 months, 10 months, 12 months. Some conditions, you'd find that maybe cancer, for some people, they say you cannot claim for cancer within the first 2 years of cover, especially if the cancer was pre-existing. So those are some of the things you also need to check. And even when purchasing a cover, please also check how long do you have to wait before you can access the benefits. Because sometimes, depending now on your health status, maybe you may need to access cover earlier. So you'd go for one that would give you a shorter waiting period. So that's the other factor that we need to consider. Then we have exclusions. Like I said, not everything is covered, even as you come in. And there are many exclusions, but these are the typical ones. So if you have other insurances, things that to be covered either by NHIF, and that's why maybe we'll be talking a bit about NHIF, and why we need to have it is anything that can be paid by NHIF, the insurance company will not pay. So please be aware of that, because also becomes a bone of contention. Ensure you have NHIF, because whether you have it or not, the insurance companies will not pay for anything that should be paid by NHIF. Then, of course, if you withheld, like what we were saying, you are not very honest when filling your application form, then any expenses related to that then will not be coverable. Any benefits that are not, listed in the policy are also not covered. If you receive, a treatment from a Mercy Andaro or someone else who's not a certified medical practitioner, then you'll also not be, that will not be covered by the insurance policy. Then if you're an active participant, and active, the difference here is active. You're actively involved in a riot or any form of disturbance. If you're a bystander and you get hurt in the process, then that will be paid. But if you're a person actively, you're the one, you're you are seen with the placards of that kind of thing, and now you got injured or were beaten by police because, you yourself are throwing stones, then those expenses will not be covered. Again, any injury that is self-inflicted or any attempt at suicide, then that is also excluded under the medical cover. Then where sometimes, there are a lot of these experimental treatments that have not really been, they haven't gone through all the, all the checks and balances, then you find also insurance companies tend to shy away from those. Then if you are involved in very hazardous sports, then that may also know, because you're high risk. Then things to do with alcoholism, drug abuse and such, those are not covered. Then if also you're treated outside the approved or recommended service providers, without, either prior agreement, then that you find will also not be covered. So those are the typical things that are not covered, but there are many more. So it's important to also check exactly, because you could be assuming something is covered under your policy only to find at the point of claiming that it is not. So now we're talking about seniors covers, and what happens for any person who's 50 years and above, you'll be required to undergo a medical test prior to you joining the cover. So some companies will either allow you to go to any service provider, they'll give you the forms that detail what kind of tests are supposed to be carried out. Others then will insist then that you're seen by service providers within the panel. This medical examination is normally at your own cost. So you will go, you do the test. If you're 50 years and above, then that test is then sent to the company. Then the company will review will review the report, look at your health status. If it's the same, then whatever their book rates are or their rack rates, that will be the premium that you are charged. But now, if you say you have higher risk factors than normal, like my clients that I was telling you about, so even her cover was downgraded, but even on top of that, they actually loaded her premiums by 10% to cater for her extra risk. You find either actions have been taken if your cover is not, if your medical tests are not very positive, either they'll cap the kind of cover, you're told the maximum is 500,000, or you have to wait for longer to be able to access certain benefits, or the company will specifically exclude certain things that I feel maybe are too risky. So that is what happens when it comes to this. In the rare occasion, they could also decline your cover altogether and just tell you, unfortunately, maybe your health had really deteriorated, to a certain extent that they feel it will not make sense for them. Then you find then they tend to, they mean that I haven't come across any such, but I know it also does happen that they can decline to take your cover. Then again, like I was saying, premiums can be adjusted upwards or loaded, say by 10%, 20%, 30%. Now based on the outcome of your medical report. So this becomes then the first step. As you're signing on a new cover, the first bit is that you actually go for a medical examination. And so these are the onboarding requirements. Like I said, you do the medical exam, then you complete a medical application form that will be given to you by the insurance company. Then you'll be required to provide your KRA PIN and an ID copy, and then also your passport photo for purposes now of identification when you go for medical treatment. So I hope that that's clear in terms of what is required as you take on a cover. Now, I also wanted to touch on what happens. So you've taken your cover, you've been onboarded, it's now 1 year after. Is renewing your cover automatic? And that's what we want to discuss here. So factors that affect renewal of your cover and even the premiums paid on renewal would one be your age and the age band. Like I said, if now maybe you are 64 last year and come renewal, you're turning 65, you see now you're already in the next age band. So the premium that you'll be quoted for your renewal will be higher, just because now you're slightly older and you've moved from the 60 to 64 age band and you're now in that 65 to 69. The other factor is your personal claims history. Now, depending on how much you claim, how often you claim within the period of insurance, then you find, depending on how bad it is, come renewal, your premiums can actually be increased. So maybe this year you're paying X, Next year, it could be X plus 10% just because of your claims history. Again, you'll also be affected by the company's claims history. And you see, insurance operates on the principle of pooling funds. So you have very many people taking cover, but paying premiums. But insurance companies always hope that not all of you, will claim. So there will be those who claim that are cushioned, but those who do not claim. So peradventure now, the people who all came and bought insurance in that year or in a couple of years, say for example, were all, had an adverse, experience, a lot of them really claimed, then you see the overall a company claims history will be bad. Yours could be very good. Maybe in that year you didn't claim, but maybe other people who are in the insurance company books then claimed, and so you get affected by that. So you find maybe the company announces from next year, we're increasing our rates by 10%, and they give new rates. So whether or not you claimed, you'll be affected by the company's claims history. And I think this year I've seen two companies who actually have increased their rates, and that is based on the entire portfolio of clients who they took, especially for the seniors cover. And let me say this seniors cover is not very old in the market. So insurance companies tend to be very hesitant and very, very intolerant. So if there is already any indication that the cover is going not very well and is going to affect their entire portfolio, then very quickly, even before a year is over, they'll be announcing at renewal rates will be going up, or some companies have even gone to the extent of, completely scrapping the cover. And that's the fourth point I was talking about, continuity of cover by the insurer. So you're willing to continue insuring with them, but then they tell you, we're very sorry, we are no longer offering this cover. And then you find yourself outside. And at least I know at least one insurance company in the market who used to have a seniors cover, maybe they'd be amongst now the 7, but they had to discontinue the cover because it wasn't making sense for them. The company claims history was not very good. So these are the things you could find even as you come to renew cover. There are things then that come up at that point in time. So now you have a medical cover. You'll be given a photo card or a smart card that is for identification. It's important to note if you have an outpatient cover that you cannot go straight to a specialist. If you need to see a specialist, say maybe a heart specialist, for example, maybe a kidney specialist or any other specialist, apart from a pediatrician or an obs-gyne, then you will need to be referred either from a hospital or what we call the general practitioners. So you really cannot go straight directly to a specialist, even if they appear on the company's panel of service providers. Then we find, because we say tier 1 hospitals are very expensive, even when it comes to outpatients, then you find some insurance companies, actually almost all will have a copay. And a copay is an amount you'll be required to contribute when you go for an outpatient visit. And this differs between 500 for some companies all the way to 2,000. And these they normally impose to try and dissuade people from going to Nairobi Hospital, the Aga Khan, every other day. If you insist on going there, then you're going to also have to go back to your pocket and contribute something. So that's important to note. Then the other thing to note is when it comes to hospitalization, especially for scheduled procedures, you must get a pre-authorization. Say you're going for a surgical case, a procedure needs to be done on you, then your doctor will need to fill in a pre-authorization that goes then to the insurance company, they'll approve, and then that's when you can go in. But for acute conditions, maybe you've fallen sick, you have malaria, something else, then those ones you can be just rushed in, and you'll have the case managers of insurance company, they have what they call their care team. They'll come and then handle that when you're already in hospital. But it's something that is not, it's not life-threatening, it is not immediate, then normally you're required to go through the pre-authorization process. Rose, I hope we are good on time.
Yes, actually, we have quite a number of questions. I don't know whether you are almost through. I wanted to make a suggestion.
Yes.
because of time, it's 5 minutes to 7. It would be good to address the questions that are there. But I feel that there is a lot more. We haven't even covered NHIF as a provider. So I was suggesting we don't go into NHIF, and hopefully, if you agree, you can come back next month, where we will now deal with NHIF and other issues, so that at least we will have ample time to address the questions that are already there. So you can complete your presentation until just before NHIF.
Actually, I just want to take the participants through just the last one, which is an example, just to compare. So we are taking a person, so you've just retired, you're 61 years of age, and you're looking for a medical cover for yourself and your spouse. So what kind of options? And I just took one. So you've chosen a cover limit of 1 million. So what do the premiums look like across the company? So for 1 million, the bed type, like I said, is ward bed. So you'd find, like say, Britam, like I said, they have 2 different kinds of cover. So they have on hospital category, category 1, tier 2 and 3 hospitals, and then they have tier 1, 2, and 3. And you can see the premiums are quite different. A cover that gives you access to tier 1 is more expensive than the one that's just handling tier 2 and 3 hospitals. Comparing the same, tier 1, 2, and 3 for UFB is slightly cheaper than the one for Britam. Then CIC is much more expensive than any of them. There's what we call the APA budget, and this is covering APA Jamii, that's covering 1, 2, and 3, tier 1, 2, and 3. It is, I think, the most cost effective. Then we have what they call the APA Afya Nafuu, and this one covers tier 2 and 3 hospitals. It is the most cost effective if you compare it maybe with the Britam one. And the last one, Jubilee, tier 1, 2, and 3, for the same cost, I think is the most expensive for that category at 69,000. Then if you have your spouse, this is the joint premium, 72.92 going across. So you can see what different companies are offering. Then outpatient, and here I'm looking at 100,000 per person. You can see for Britam, very expensive. For 100,000 for tier 1, 2, and 3, you're taking a cover of 100,000 and you're paying 96. I have my comments around that. Then you have your APA 35, CIC at 46, APA 33 for 100,000 and 26. I think here, as a rule of thumb, when it comes to picking outpatient limits, if what you're being charged is more than 50%, or say up to 60% of the cover that you're purchasing, then you're better off funding your outpatient expenses in another way. And I think, Rose can assist you with that. We know maybe creating a money market fund that can actually cover that, because you find you may not be getting as much value. Maybe unless, of course, you're really, if it's 100,000 that you'll be utilizing the entire 100,000 in the year. But I see I don't think it's very cost effective for you to pay 96,000 to get a cover of 100,000. So here, when it comes to this, the rule of thumb is look for premiums that are 50% and below of the cover that you're purchasing. So I think, Rose, we can stop there, then attend to the questions.
Right.
I think the rest now is the NHIF.
Okay. Thank you so much. That was so good. You are so eloquent. You're so clear. I'm so proud to, I think it's long since I had you present, the last 5 years since employment, but you are very eloquent, and we can clearly see exactly how well versed you are with these products. So I fully understand a lot of medical insurance, but I know I'm not an expert in medical insurance. And that is why we always say, please try use professionals as much as you can. While I'll know something about medicals, Mercy will have experience with different providers because she has interacted with them. She interacts with them on a daily basis. So I just want to thank you as you catch your breath. I just want to thank you for that presentation. I know medical is detailed, and I know you didn't go into full details. You captured the most important part. And as you're going through this, I just decided, okay, I think we need another session because there's a lot more that even comes as you explain. So for purposes of those who would not want to stay very long, let us first address the questions because I believe they're very, very important. I know people are saying, let's do NHIF, but I know we won't do it justice. And NHIF is basically a solution for very, very many people. So it's not something I would want us to really rush into. But before we go into the question, let's give Mercy 2 minutes. Let me explain how insurance works, because most people tend to feel frustrated with insurance companies. Now, insurance companies work on what we call the law of large numbers. Remember, the people who set up insurance companies are in business. They need to make a profit. Otherwise, they would rather go buy land or put the money in bonds and make a return. So in everything they do, they must ensure that first, they're able to meet the obligation, which is claims, but they also need a return. So if they don't make a profit in 1 year, it's okay, they can absorb that, but they cannot continuously do business without making profit because that actually puts you at risk. They will not be able to actually meet your medical expenses. So that's why insurance, they tend to keep adjusting depending on the circumstances. So when the claims are high, they will put the prices up because they must ensure that they have enough premium to invest and even to do reinsurance so that they're able to meet your cost. So one of the things we notice with the general public is that people stay away from insurance when they're healthy, but when they see signs of I could be unwell or I'm getting old or something like that, they rush. I remember when we were in Britam came up with a product which they partnered with Safaricom. I've been trying to remember that product and I cannot remember what it was called, but it was a very cost-efficient medical cover that was available to people and the uptake was quite good. But guess what? People used to call me and tell me, oh, there's this product you've come up with. My dad is unwell. I need to take it. And many of the people who took that cover, especially the elderly, were people who needed medical attention immediately. And that cover, I think it didn't last 18 months. They really had to close it because it was actually not serving the intended purpose. And if the uptake continued to increase at that level of premium, there is no way the insurance company would have met that. So let's understand it's a business. So that is why they will keep on revising the covers. They will revise the limits. They will revise what they cover. They will introduce new things. And that is why when we plan, we have to ensure that we're not just planning, assuming that this insurance will be there. I think Mercy has really said that. That you might want, you can even afford the higher premium, but the company can decide, no, I'm not going to be in this business anymore. Yes, Wanjiro Ngeve, thanks so much. You've reminded me the product was called Linda Jamii. It was very well publicized. The uptake was significant, good, but eventually they had to put it down. So it's important then that we plan. We plan that you might have insurance, you might even be able to afford it, but the providers might not be able, might not be willing to actually give you that cover. So it's important that you plan both for insurance and potential out-of-pocket expenses. So with that, let's go first address the questions as they were, and I'll try to combine some of them. There's the first question was from Mike. Michael Watoko, and I can see a number of our former colleagues. I think they were really happy to come and support you. Michael Watoko was a former colleague at Britam. He's asking, are the covers you've discussed individual or are they for group covers? Are they group covers?
Okay, so these are individual covers. But where you have a group, then you can have a conversation with the insurance company to actually set up something that is unique. But what I've seen, especially with these post-retirement schemes, you could actually be very prejudiced when you also find yourself in that kind of setting. Because I've seen some that I've had to disband. Like I think I had a neighbor, actually not a neighbor, a friend of my father's, and I think they were paying around 300,000 for a cover limit of I don't know how much because of being in that group setting. So it's possible, but sometimes you could find yourself suffering because of group dynamics, that you become punished because of, that once you're in a group, the fortunes of the group, you share in the fortunes, but you also, you also share in the losses. So it's possible, but that would just be my caution around that, especially if the experience is bad, but it's possible.
Actually, that is one of the things I would want us to discuss next in the next webinar, because we're also seeing a number of organizations whereby as people retire, they are forming now a group. And then I've had one client and where we really had to discuss, do you join that group or not? So when you're an individual within a big portfolio, I mean, I believe they look at you, probably the company can decide to classify you as seniors, or they can decide to look at their entire medical portfolio. So it's a difficult decision you have to make at individual level. But if you come from a certain profession where people's health is not so good, you're definitely setting yourself up for higher premiums. But I think next month we would want to go into details. What are some of the things that you need to consider when you're actually buying this cover, whether to go individual or to go as a group? Then we have Moses Kangede, again, another former colleague. He's asking, is there any medical provider who would give you assurance that they'll give you a medical cover for life?
Well, it's on paper, but I think if we go back to the slide, I said, they say it is for life, but you may, let me use a Kiswahili word, you may jichuja, you can chuja yourself. You can eliminate yourself from the process because, like I said, the older you become, premium increases as you get older. So like I'm saying, if someone has not come and sat with you, Rose, or otherwise planned themselves properly, you'd find then maybe they can't afford it. So, as they get older, but the company, then they're willing. So the other thing would be your claims history. If it's really, maybe it really gets bad, you're claiming a lot every year, the company may then rate you in such a way that, you're better off just taking care of the bills yourself in terms of how much, it's a rating. It can be, it's a sort of rating to chase you, but there is cover for life. There's cover, at least there are at least 3 providers who are covering that you can continue renewing for life, subject, of course, to those parameters. That there'll be other things that eliminate you. That could be personal or on the company side, Yeah,
and I would probably just maybe add the obvious. The business could, the company could go out of business.
Yes. Yeah.
They could be denied a license, or they are no longer a going concern. So what we say is that you can never foretell what will happen in future with certainty. So the whole issue of diversification, plan for insurance, but also make other additional plans as well.
Yeah.
There's another question here again, Michael asking, and I think this one you have answered. I think I will not pose that to you. He's asking whether the medical cover you take restricts you to the tier hospitals that you go to. The answer is yes. I think you've really elaborated that. So most providers will tell you which hospitals you can go to and which ones you would not go to.
Yeah.
Yes, then there are others. Can you buy more than one medical cover? Can you have more than one?
Yes. Okay, so when it comes to health, yes, but okay, maybe not with the same company, with different companies. And I've seen people do that. Yeah, it's possible. It is possible. Because everyone is rating you on their own, they are onboarding you. But then when it comes now at the point, there's also the concept of double insurance. If at the point of hospitalization, every one of them now will pay to a certain, you will decide at the time of being hospitalized, which cover you pick. Because sometimes you find maybe, even in the case of husband and wife, say maybe you're working and the other one is working at a different company, you could find the both of you have 2 different covers. So it's possible to have more than 2. But then at the point of claim, you decide which is the primary cover. If that one is exhausted, then you can call on the other cover to contribute.
Yeah, so in insurance, there's one day we'll have a webinar on principles of insurance. There's a principle we call contribution. So, and there's also a principle we call indemnity. Indemnity means you're not supposed to benefit from insurance. So there are certain insurances you can have multiple, especially things like life insurance. You can have as many policies as possible unless you're taking too much insurance, and the insurer might want to know why are you doing that. Medical is one of those insurances that you can actually have more than one, but basically they're supposed to contribute to the bill. But I know probably here in Kenya, we are really not very strict on that. But
yeah.
Because they should all contribute. So if you have a bill of 1 million and you have 3 insurance covers, then they should contribute proportionately. But there's nothing wrong with having more than one medical insurance covers. You could be having one, your spouse could be having another one, or maybe through a group, you could be having another one. Someone asking, which company offers payment of an amount of 3 million? I think this is the insurance companies that is guaranteeing you a medical cover for life. You have the name of that provider? So for example, like at retirement, they can actually, they're calculating how much premium you need to pay for the rest of your life. You know of that company?
So you just come again with a question, guaranteeing?
So I think I'm aware of the company. Maybe I could answer this one. APA is one of the companies that have come up with a medical product where you can actually be saving towards premiums, but on retirement age, just before you retire, you can actually pay a lump sum amount, which they determine, and it's supposed to guarantee you health care for life. So at least I know APA is one of them. I don't know if there's another provider yet.
They're actually the only one so far.
Yeah, but however, we actually expect this we expect more companies to get into this because the retirement benefits regulations actually are allowing you to transfer 10% of your savings at retirement to a medical provider. So the design of that product then needs to be that it will be able to give you cover for life. So like Mercy said, this is a new development. 5 years ago, we didn't have seniors cover. In the next 5 years, we don't know what we'll have. We'll probably have a lot of these solutions. Beatrice is asking, is there a waiting period when somebody is transitioning from employment to retirement? And I think this happens with many of my clients. What would you advise clients who are retiring and exiting the employer's cover and in the process of setting up their own medical cover to avoid that gap?
I think normally if you have a renewal, if you can provide a renewal letter from the company you're exiting from, then you can provide that to the new insurance company and they can waive. Also, if then you're maybe say, for example, that you are with the same insurance company, that's why you also want to pick your individual cover, then the waiting periods will automatically be waived. But if you're going to another one, then you may need to produce a renewal, and some could go to the extent of asking you for your claims history, to be a way of waiving the covers. But I'm saying companies tend to be very hesitant when it comes to this. They are not as flexible when it comes to senior covers as they are on the other for people who are aged 50 and below. But it is possible that they require the renewal invitation, and sometimes if they are not very convinced, they could ask you then also for a claims history.
Okay. Beatrice is asking, why do you need a KRA PIN?
Now, these are actually anti-money laundering requirements. It's part of know your customer requirements that are global. It's the same thing. It's in all financial services. The bank will also require your KRA PIN. Insurers are also required to know their customers. So copy of ID, KRA PIN, mandatory for all insurance covers.
It's also a way of ensuring that we are dealing with law-abiding citizens who pay their taxes.
Yes.
Okay. Then there's a question from Rose. I believe that senior citizens take post-retirement cover because of chances of having pre-existing and chronic conditions. I tend to believe the insurance companies are not fair when they put age limits or decline taking cover for someone in need. How best can they assist such clients?
Okay, and like I said, it is a rare occasion, unless your health is really, really bad, they may not outrightly deny you cover, but they'll definitely, because you present a higher risk, then they'll definitely, they'll mitigate. Like Rose was saying, they're actually in business and it's based on risk factors. So if your risk factors are very high and maybe you've not been managing, you've not been managing your conditions, then they will then protect themselves by giving you a lower limit, subjecting you to, longer waiting periods, to try to get you to also, take some responsibility for what you're doing. And like I said, there's some companies that then are offering actually what is called a wellness cover. Britam is one of them who offer that, a wellness program, where now you enroll to that, you're assigned a nutritionist. If say you're diabetic, then you're given a diabetes specialist. If you're hypertensive, then a specialist in that area. And that the consultations for that, if you have outpatient, will automatically be paid off your cover. But then you have consultations, they manage you, they manage the risk. And you could find as you improve that maybe some of the embargoes on your cover are then lifted because your risk factors are also improving. So this is also to get you to take responsibility. I think Rose has been talking a lot about, part of preparing for retirement is really health is a key one. If you've been unkind to yourself, health-wise, you get to pay for it really severely when you're in retirement, and you're punished in premiums. You're also punished by, having to live with ill health. So that would be my response to that.
So again, still on the insurance business, if you insist on a cover, the insurance company, by the way, can give anybody any cover. But what they will do, because they are certain you're going to spend that amount of premium, amount in medical expenses, they'll charge you the same in terms of premium. Actually, going back to Mercy's issue of outpatient, basically that is what these companies are saying. Britam is asking you for 77,000 for an outpatient cover of 100,000, because experience has taught them that these people spend almost everything. So if I am sure that you're going to spend it, then the only thing I can do is to collect all of it. So you can afford, you can get insurance. If you must get insurance, you can, but they'll charge you such high premium that it will not make sense. And so what they do is try to make those restrictions like Mercy has said. So if you find yourself in that situation where the cover is too expensive, then that is why now as we prepare, we need to ensure that you're also preparing in other ways. Because remember, you could even suffer a condition that is an exclusion. And you'd still need to attend to that. So medical insurance, we need to know that they cover most of the conditions, but they don't cover all the conditions. And even for the conditions they cover, they don't cover. It may not be 100%. They don't. It's not an open cover. So it's important to notice that. Geoffrey Mukwe is asking, and I think that is what we'll discuss next time, advantages of a personal versus individual cover. And also, I think there's another question from him. Are there insurance companies that only do group covers?
No, you have access as an individual. Okay, the seniors cover, you access it as an individual, but you can also, come together as a group. And then that will be rated, the rating would not be the same. Sometimes, depending, you can get, because of coming in as a group, you can get maybe better benefits and also probably lower premiums. But like I'm saying, that could be how you enter. But based now on your claims history, then that can really escalate into something else that may not be desirable.
Exactly. So I think Beatrice had also a comment. As a senior citizen, it would be more profitable to access your medical doctor who has your history. The general practitioner approach does not make economic sense. How else can this be managed? I don't know if you get the question.
Yeah, I think it goes back to the point I was saying that you cannot go, directly to a specialist. And sometimes what I've seen, especially for people who come in as a group, you can have your doctor onboarded there. Then 2, you can actually be referred. And it's not really very tedious. You'll just go into a hospital, they'll just do the normal consultation and all that. And then, they'll do a referral letter. Because otherwise, without that referral letter, then the insurance company will not pay for those, those expenses now with your doctor. And that you only need to do that once. So once they've done the reference, then you can still use that reference now to continue. It becomes like now, the key to opening the door to seeing your specialist for a particular thing, and it's noted as such. But then they feel it's not right for you to just go, on your own volition. There may be no, because these specialists charge more. I guess it's also their way of managing that. That's only the people who really need to go to specialists who end up going to specialists.
Yeah, and that is a very contentious issue. And yes, like you said, I'm hoping to get a doctor who can come and talk to us. And those are some of the things we'd want them to address. Is it best to go to have to work with a general physician, or is it should you just go to whichever doctor? So yeah, we will look for that. But from a financial perspective, we always advise work with a general physician. A general physician will normally attend to your needs in a general way, and where they cannot handle, they refer you to a specialist. And one of the things they do is that they hold your history, which saves you money in terms of medical tests. Because if you go to another doctor who doesn't have your history, they will have to run a battalion of tests. So you might end up spending more for information that your general physician already has. But that is from a financial perspective. From a medical perspective, then we will engage a doctor and to see what they say. But even with insurance companies, basically that is the approach they take. First, see your general physician, and then if they need to refer you, please do that. So there's many people who really wanted the NHIF, but you realize that we wouldn't have been able to handle it well. And even as we speak, it's going to 7:30, quite late. But there are so many people who have congratulated you on a very well done presentation. You are very eloquent and very articulate. I think I don't know how to put it. It couldn't be better. I don't think you can make this any better. So we'd be glad if you're able to join us next month, and so that we go deeper into this some of these issues, and also we capture NHIF, because it's one of the solution that if you can't afford, for example, insurance for your parents, because it's probably expensive, they have a lot of pre-existing conditions, so insurance might not make sense. NHIF is one of the things that we need to do, and definitely a large proportion of seniors benefit from NHIF. But let me just ask one question. Yeah, I should know this, but I don't. When it comes to Kenyatta National Hospital, private wing, and now probably KU teaching and whatever referral, is that a tier 3 hospital? Are those tier 3 hospitals, facilities?
So, okay, generally speaking, government hospitals are in that category, but then you find that particular, even MTRH, the teaching and referral, some of them then find themselves with some insurance. You see, every panel is different. So you find they've been upgraded to tier 2 because of the kind of facilities, the kind of access you have there, and the fact that then their accommodation also, especially if you're using the private wing, is not the same as the general other government facilities. So you find for some service provider, for some insurance companies, they will rate a service provider as a tier 2 rather than a tier 3.
Okay. Thank you. So I want to thank you so much, Mercy. I think we'll stop there for the amount of time I know you've put in this and even presenting so well, and we look forward to hearing from you next month, God willing. And for the rest of the audience, we thank you for being with us up to this moment. And I think if you're coming in for the first time, it's important to let you know that we normally have these webinars every second Thursday of the month, where we discuss various aspects of retirement planning. How well can you manage your finances well, and not just your finances, but your life well during your working career so that you prepare well for the next season. And as you have seen, there are very many intricacies, even when you're